What's going on, guys? Today I want to talk about a recent report from BMO, one of the biggest banks in Canada, on Canadian mortgage arrears. Okay, so while we've seen an increase, it's not expected to reach its long-term average. So let's break down what all this stuff means. So first off, the mortgage arrears in Canada, which tracks mortgages delinquent by 3 months or more, has been gradually increasing over the past year. Okay. However, it's still very historically low. According to the Canadian Bankers Association, as of April, the arrears rate fell to 0.18% from 0.19% in March. This translates to just 9,252 mortgages in arrears out of over 5 million. Okay. So very, very low number. Now, this rate has risen from a low of 0.14% in 2022, but remains below its recent peak of 0.27% in June of 2020, and significantly lower than the all-time in 1983, which was just over 1%. Not all regions in Canada are experiencing the same rates. Saskatchewan has a bit of a higher arrear rate, hovering around 0.60% for the past 4 months, while Ontario has the country's lowest delinquency rate at 0.13%, followed by British Columbia at 0.16%. And I'll throw up a few charts for you guys to see that. And it's really interesting that Ontario has the country's lowest delinquency rate, okay, where the real estate is probably one of the highest, just under Vancouver, which I think takes first place. Now, BMO senior economist Sal Guattari noted that while home loan defaults are mounting to rising joblessness, resetting mortgages, and soft home prices, the vast majority of Canadian mortgage holders are still making their payments. Okay, many are cutting back on other discretionary spending, stuff that they can come back on, or negotiating longer amortization periods to lower their monthly payments with their lenders. This has helped to stabilize mortgage servicing costs as a share of whatever income those people are making, even though they're near record highs. Now, despite recent easing from the Bank of Canada, right, we've had two 25 basis point cuts, right, by now, and a decline in fixed rate mortgages, the rising unemployment rate is expected to drive delinquencies higher in the near term. This is the key metric that I've been talking about for a while. It's what I'm watching. It's what a lot of people are watching, the unemployment rate. It has been starting to move up. In June, the national unemployment rate rose to 6.4%, translating to 1.4 million unemployed individuals. Okay, projections suggest it could top out at 7.5% by the end of this year. Okay, so that's up more than a full percentage point. Full percentage point doesn't sound a lot, but when it comes to the unemployment rate, that's a big jump. Okay, though BMO sees it peaking around 7%. So we just have to wait and see what happens by the end of the year. With rising unemployment and mortgage resets, some upward drift in arrears is expected. Additionally, a record number of mortgage renewals at significantly higher rates in the coming years will pose challenges for a lot of borrowers, right? This is the whole payment shock I've been talking about on the channel. If you've been following, the Bank of Canada predicts median payment on a maturing loan could rise by 34% by the end of 2027. Okay, so this is going to be a big moment over the next few years for people. The payment shock, the possible unemployment number rising. So some borrowers will see payments exceed their stress tested levels. Okay, so stress test is something that's been put in place for a while, but borrowers will see payments above what they've been tested for. And we don't really know what will happen at that point. It'll be very interesting to see what happens. But others will benefit from fixed rates now lower than the qualifying rate of 5.25%. So the mortgage stress test requiring borrowers to qualify at a higher of the minimum qualifying rate or their contracted rate plus 2%, typically that's what it is, helps prevent defaults by ensuring borrowers have a financial cushion. But if people are now being forced to pay more than what they've been stress tested at, It's going to really test a lot of borrowers' limits. Even with the sustained rise in arrears rate, it would take significant momentum to approach the long-term average of 0.40%. Now, BMO is forecasting mortgage arrears to peak at around 0.34% by mid-2025 before settling back in at 0.28% in the medium term. Now, the resilience of the Canadian housing market has also helped, right? Home prices have remained robust, providing homeowners with equity that can be leveraged if necessary, kind of acting like a safeguard against a significant rise in arrears. However, BMO acknowledges potential risk to its forecast, right? These are just forecasts. These aren't for sure numbers that are going to happen. Arrears rates could go way higher than this. And if it does, it's not going to be pretty. It's going to be ugly for a lot of people. It's going to be ugly for a lot of homeowners. It's going to be ugly for a lot of people who hold mortgages in Canada. A rise in the national employment rate of 9% or a further 14% drop in home prices could push the arrears rate above its long-term average. And that could certainly happen. Those numbers could easily happen. And if it does, it's going to be bad. It's going to be bad. But more likely, falling interest rates will support a modest recovery in the economy and house prices, limiting the strain of mortgage resets. So the mortgage stress test, which was introduced in 2016, is expected to pass its big first test, okay? This is the biggest test that the mortgage stress test will ever face over these next few years. And I will be keeping you guys up to date on all that information. If you guys are interested in that, please subscribe. Of course, if you guys like this content, please like it as it helps me push it to a new audience who might really benefit from the information. Perhaps other people who are holding mortgages, perhaps people who are thinking about buying a house, but are just really put off by the rate situation. I put out a really good video yesterday just about the rate forecast over the next year and a half. It's a great video to check out. Of course, make sure you guys stay informed, stay learning, and make wise financial decisions. And I will see you guys in the next video. Take care.